want to get your response to that comment we just heard from the SEC chairman.
Yeah, I think first off, it's important to recognize, taking a step back, that I have tremendous respect for the SEC, and we have a great working relationship, and we work very productively on so many different issues around capital formation, around trading in the markets. Chairman Clayton and his team, Director Redfern, have been really vocal advocates of a great support system through all the volatility that we've seen through March. And we've worked very, very well together to make sure that our markets continue to deliver and operate the way investors expect them to through any kind of market conditions like we've seen. That said, there are certain areas where we've disagreed on policy decisions that the SEC was making and how we were going to experiment with some of the market models. It's also important to recognize that retail investors actually have it better than they've ever had it before. But it's true that there's a lot of complexity and fragmentation in our markets today. And institutional investors have it's a more challenging environment for them to be able to trade and execute securities. And so there is cause for discussion and review to enhance our markets and improve them. The pilot that was being proposed didn't actually accomplish the job of measuring those conflicts of interest. There is data already available out there to do that. And secondly, it just was outside of the regulatory authority of the SEC. So we tried to propose an alternative and come up with another solution. We'll continue to do that. We'll continue to work with the industry on alternatives. But the one that was being passed by the SEC was outside of their authority under the Exchange Act. We ended up challenging it in court, and I was glad to see the courts agree.
Yeah. So when you talk about alternatives or coming up with a solution, what could that potentially look like? And I ask because, and I realize that this could get really wonky really quickly for TV, but what could that potentially look like? Because whether you're talking about fees for data or even if you're talking about, say, connectivity and the ability to move faster, execute a trade faster, I got to think that that actually benefits bigger players with deeper pockets. So how do you basically level the playing field and ensure that everybody can participate in an equal way?
Yeah, I think one of the things to recognize is when the policy decisions were made to promote competition in the markets, it led to fragmentation. What that led to was better prices for investors as variable costs went down, but fixed costs went up as people are connecting to more and more places to execute trades. So it's gotten more expensive for industry professionals. So Main Street has done better, but Wall Street is paying more money. What we can do is recognize the fact that there is a correlation between both fixed costs and variable costs and come up with a solution where we can reduce the overall fees on the industry without putting different companies into different buckets. That's certainly something the listed companies at the NYSE weren't in favor of. There were dozens of letters written through the SEC comment process opposing the pilot. And so we looked at all of those letters, and we came up with what we think is a good compromise. We had suggested it as an alternative, and we can dust that off now that the courts have made their decision and see if there's more industry support now to take that route that would lower the transaction fees and reduce the scale of potential conflicts.
Hey, Stacey, good morning. It's John Fort. Good to see you and good to see that kind of familiar look of the floor and hear a few beeps and boops in the background. We don't get to hear that as much as we used to. When we spoke with you 3 weeks ago, when you were first opening the floor back up, you said there was no timetable for bringing more people or everyone back. Is that still the case?
Yeah, not a specific timetable, but we are moving to phase 2 this week where we've increased the number of people that can come in. So bringing back some of the designated market makers. We're still not at full capacity, but we're scaling it up. Importantly, we've been open 3.5 weeks. We put in place a number of protective measures. We've seen no positive cases, as we've been testing people that come in either randomly or because of our screening process. And what we're learning is if you act responsibly, we can protect each other. I've been really disheartened by seeing some of the videos and footage of people in places that are reopening, just kind of going back to normal and not acknowledging the fact that we still have a pandemic and we need to be responsible with our actions. So if you do that, you can scale up. And that's what we're doing. We're scaling up, but still responsibly.